Good morning, my fellow traders. Hope you all enjoying your weekend and hope you guys are relaxing from trading, and that is why we have got a weekend. But I do all my work, all my preparation over the weekend for myself and for my members, of course, so that you guys can take your efficient trading decisions. Now, this video is going to be really important, really excited. I know I say that every weekend's video, and you guys can see that every weekend's video you guys can learn something from me. You guys can pick up something good from me that you can implement in your trading, and maybe you can improve your trading psychology or you can improve your trading technically, because over the weekend I show you how my week looks like. The trades I've personally taken in the real account, some trades I've mentioned to the members in the live session, the reports I sent to the members, the trade alerts I sent to the members. Talking about trade alerts, this week was an awesome week for me in regards with my trading for Forex, few commodity trades, but mainly Forex. I had some badass trades. Now, not every week is a good one. Last week I've said that it was choppy, and this week was a good streak of winners. I'm going to show you the losers as well, but losers are not many, but that didn't hurt me. Talking about losers. Now, remember last week I've taken this nat gas trade, which was right here on Oanda. One was this entry. That hit my stop loss. But I've taken one more trade here, my buy trade, and I've taken one sell trade as well. Right here, that hit my take profit. So within the buy, I have hedged for sell, exit here, and then I bought here. So overall, my loss was almost minimal, at almost zero, I would say. Now, I know lots of traders who are not experienced, or lots of traders who might be experienced, who doesn't have a good trading psychology, who don't want to accept the losses. They are still hanging on with this trade and they have not taken the loss. Now, the price can, yes, still reverse from here. That is possible, which I'm going to get to in the analysis part, what to expect. And we are also getting a Trump and Putin meeting today, and that is something I'll be looking at throughout the weekend, and I'll be adding that in my weekend's video, because this weekend's video take 1 or 2 days for me to make and edit and send it off to you guys as well. Now, lots of you might be hanging on with this trade all the way from here till here, and you might have a bit of relief here. Now, what have you missed out? Now, someone who have hedged this trade, let's say you have hedged this trade after the price moved down here, how are you going to know where you want to come out? Now, if I've hedged my trade, I would like to come out at least at the level of support right somewhere here to buy it again to mediate my positions. That is a logical move for me to enter net gas. Another logical move, which I'm going to mention shortly, but what if you have hedged it and then the price never came down, and now you are stuck in the sell and you are stuck in the buy. Now you want to cut your buy. Now what about the sell? You are stuck in the sell as well. So that is why I don't recommend hedge. I've shown him a loss last week. I've taken the loss. I've shown the screenshot as well. See my last video that was posted on Monday where I've shown him a loss. I've taken my loss, and the benefit of taking the loss is that I was able to take some other badass trades. I've not stuck myself in this trade or just thinking about this trade all the time. And if I do that, I won't be able to focus to take the other good trades, because if you're stuck in a trade and you're mentally still thinking about that trade, unless you have a big account and you don't even bother about that, you don't even bother about paying overnight charges and all that stuff, but to manage the hedge, it is very hard. The way I've hedged the market, when I bought right here from the support, the price pushes up and falling, because my stop loss was right here and my take profit was right here. In the way down, I found this bearish entry as well. Because this was not an A+ setup, I decided to go short and keep my stop loss smaller and take profit smaller as well. So in case the price, let's say, move against me, it will cut me out in the sell trade, but I'll be still in the profit from a buy trade which I was already in. So that was one scenario. Another scenario is if the price pushes down, as I'm already in the buy trade from here, if it pushes down, my loss will be reduced from the buy trade and I'll make some money. My take profit was exactly here. So in the way down, it will at least give me some money before hitting my stop loss. So on the way down, I've hedged, came out quickly because my entry condition happens. That is why I've hedged the market to manage my trades. And then what happened? We have a double bottom. So I made a money here, and then we have a double bottom here, and then I made a money right here, 1.4 to 1 I've made, and then the price hit the stop loss. That is how I hedged and managed my trade, and then the price pushed up. So that is a logical way if you want to hedge the market. Because I've taken my loss and I have got another opportunity. If you remember in my last weekend's video, I've shown you one live running trade in my account. The trade was running live, which was already right here First, for the keyboard warriors, I know there's a lot of keyboard warriors. I just want to criticize, and I want to show you where I've shown you the trade when I only entered. I holded this trade over the weekend, and I showed you guys publicly my trade as well. So let me show you, and then I'm going to show you that in my real account as well. So let's see the clip, and then we're going to connect the dots from there. The trade that is still running, which is right here. Now, don't take these trades at this point. You might be cursing me afterwards if the price pushes down, but it is something I've entered it with the exact same condition. Keyboard warriors, quickly want to show you my real account. Right here, this trade is still running. Now, I've just removed my stop loss and take profit just to avoid a slippage or a price to hit my stop loss with a spread, because this pair has a high spread and the market is about to close by the time I'm recording this video. That is why this trade is running. As you can see, my account IC markets here is connected right here. This trade is running right here, and I will set up a stop loss and take profit once market is open. So that is still running. I'm not sure how it's going to go, but it is something that is how my target looks like. So I will be managing this trade till here or till a next level. That's totally up to me. Perfect. So that is what you call a badass trade. Now, the loss I've taken for nat gas, this has given me some insane amount of profits. Now, let me show you in my own account, IC Markets, right here. This was my entry. This was my exit of this trade. And as you can see, that was 1.6 to 1 reward to risk ratio. And that is not just one trade I've taken. In my other MT4 account, this was in my TradingView account, I've entered one more trade right here. And I was so precise with my stops and targets because I know that that is a structured level from where the price previously fallen down. So the entry happened here. If you are my students, you know these are the entry, and I was right to come out here because we had this pullback. I was right, captured my profits, and with next entry condition, I've entered again right here, and that was again 74 pips for me, and my stop loss and take profit aligned with this resistance. Now, I was not greedy to manage my trade to high because I want to see a break above these highs for the trend continuation trades. For me, I've captured a big move here, 2 trades already. The third one also I've taken, and that also hit my take profit. Everything was happened with the rule. This entry, engulfing entry, I've taken, then we have another entry, a new high, engulfing candle, and that is how we take the trending trades. Now my strategy goes with all the markets, crypto, indices, stock market, and that is something I'm going to show you in this video as well. But hang in there, let me show you one more badass breakout trade which I teach my members, my students. For the students, I'll be putting that in the course with the exact rules. For now, just follow me with this breakout patterns which I mention every Monday in my live sessions. If you have a YouTube paid member, then you also get this members only video where I mention these entries. And one entry is right here. Now, there are 2 types of entry if you want to take a breakout entry, triangle pattern descending or symmetrical triangle pattern if you are taking those entries. Now, this was mentioned in the live session to look for the breakout above or below. In an uptrend, we had a nice triangle pattern, and I have some traders they like to enter right at the breakout, which would be right here and something like this. So that would have played out as well. But for me, as you know, I'm not an aggressive trader. I like to see a solid pullback. I've taken few aggressive entries as well, which I'm going to come to very shortly. But this one, I wanted to go after a pullback and a retest of my triangle upper trend line. Now, if you look here, the price breakout, I decided to wait till the price come down and retest my triangle pattern. And what do you see here? A bullish engulfing pattern. Now, if you zoom that, if you are my student, that is also an entry pattern I teach you in the course. So that is a double conference. First the breakout, then we have this entry pattern which I teach my students right here. And with this breakout, I was already looking for the breakout. We had an entry condition, and that also hit 100 pips of take profit. So that is a way of taking your trades less aggressively right here, and that nicely pushed up. That gave you extra confidence that we are now pushing up and price has broken out. I've kept 1.4 to 1 because I want to keep my stop loss exactly to align with the next level of resistance, which is right here. That is why I kept my take profit till here. I don't have much time to look at the charts, otherwise I would have managed this trade and trail my stop loss to capture as much as profits as possible, which you guys can do. That is totally fine, and that is even better if you trail your stop loss and extract as much as possible profits from the market. So one trade here, and let me show you the clip from the live session so that you can see that everything is been prepared before we take an entry, and everything happens with the rules. And the way I mentor my students, my members, you can see that how nicely we set up these trades. It is just a channel range. We are not looking for any trades till we see a breakout above or below. So let's see where it breaks. Above will be a trend continuation, below will be up down side move. Nice one. So we were already prepared, and that is how we have managed to capture this profits. And again guys, that will be in your course very soon. So for now, just bear with me and look for these conditions events I mentioned in the live session. There are a few rules. These are subjective rules for the triangle patterns, and in subjectivity we need to have some rules as well. That is something I'll be putting in the course. Now talking about aggressive and less aggressive trade, I want to show you one aggressive entry I've taken. Now this was an aggressive trade I've taken my trade towards the upside. That was a fake out happened right here, but then the price quickly break out above. Now I've entered my trade above with a solid green candle, not this one. If you ask me why, because the price was above 50 and 20 EMA on a daily as well. So that's why my bias was towards the upside, and I wanted to see a breakout above to take my trade. So that is why I've entered right here aggressively. But that also formed a less aggressive pattern. So that was my aggressive entry, and that has then pushed back down. It hasn't hit my stop loss, but about to hit my stop loss. We'll see how that goes next week. This trade is something that is still running, but an aggressive entry I've taken. Now I'm going to show you the trade alerts I've sent to the members. Now first we have NZD-JPY. You guys must be familiar with the pullback entry. We had a nice pullback and engulfing candle, and that is a trade I've taken and sent to my members right here. 1-to-1 target has been hit, as you can see the screenshot, and these are trades I sent to the members 1 to 3 times a week with reports for you guys to learn these entries. And I've shown you exact same patterns in the other markets. Learn from that, learn from the screenshot I sent to you. That's the basic information you get from me, and then take your trades, back test it, and add those pairs in your portfolio. That is how you can become a profitable trader. Every week I show you my losses, my take profits as well, and that is how you guys need to learn and build your own trading system. So this was a successful trade we have taken in the group, and then we had taken one more badass trade which I managed, GBPAUD. By the way, this NZD-JPY trade, I tried to manage that to these highs, but this trade has cut me out in a break even. So for this one I had a 0 loss and 0 profit, because once my take profit was hit, I moved my stop loss to break even, and then it pushes back down. So I have not made any money on this trade, but for someone who's my member, that is a winner as well using 1-to-1. But that is totally fine, because the next one, let me show you, was a badass trade right here that was sent to the members as well. Now for this one, exactly the same as you can see the screenshot on your screen. We had to take profit 1 and take profit 2 was something right here. That was 82 pips, but I managed my trade till where? Till the next resistance on 4 hour, and that has given me 1.6 to 1 reward to risk ratio. So the previous trade would be a winner, but I tried to manage it. That didn't play out, but this one has played out because the GBP was getting stronger and was stronger since last interest rate decision. That is why I was really confident for this pair that it can push up likely. So once the price was here, it was about to hit my take profit 1, but then it pushes back down. And then what happens is I've moved my stop loss to break even when the price hit my take profit 1, and I was risk free for this trade, and then it pushes up quickly and hit my take profits. That is how I managed to get this badass 136 pips trade. I've already shown you my live account with the live running trade with the previous trade. I don't want to show you every single trade, but you know that these are the exact rules I personally follow and try to teach you. Trade alert was sent to the members, and that was one more winning trade. Now one more trade that is still running, and that was a trade alert sent to the members as well. Now this trade is still running, and it was about to hit my take profit and pushes back up. Now like I said, I don't want to show you every single trade. It's going to make a video much longer, but let me show you that this one, since it is not in profit, as you can see right here. Now this trade is still running, and I've entered 2 trades, one with take profit 1 and second with 1.4 to 1 reward to risk ratio. If the price pushes down, hit my 1 to 1, I'll be out and it will hit my take profit 1. So this trade will close and I will have this money in my pocket. Now the second trade is still running. So first it will push down, and once they start to push down, I will move the stop loss to break even, and the price, let's say, hit my take profit, I will have 2 trades in my pocket. Otherwise, if it cut me out in the break even, at least I will be in profit with 1 trade. So I'm not sure how it's going to go next week. It might hit my stop loss totally and I'll be out of this trade, but if not, then this is something I'm in, and I personally do my risk management to capture as much as money from the market. So that is the trade still running, that is in front of you, same like I've shown you GBPNZD last weekend's video. This is exactly the same. It might not play out, it might, but if it does, then you know how I take my trades, and that is totally in front of you with the full transparency. But it is not a blind trade I've taken this trade with my rules, which is my bearish engulfing entry, because I look my charts on OA and I mainly tested all my strategies on OA and right a bearish engulfing entry. Right, I've said that, sent to the members as well. As you can see the screenshot in front of you with that. This was the report sent to the members. Last week we have taken the trade from the green zone that pushed up nicely. Then this week we were looking at the level above. And as you can see, we entered the trade, looking at the rules, looking at the conditions, all the confluences, and then we entered this trade right here, and we'll see how this goes. That is how I take my trades right in front of you. All the losses I've shown you, just 2 losses I have. Otherwise, I managed some good trades, a break even, but still in badass profit. Now I want to show you this trade as well. Now this is not a blind trade we have taken right here, the soybean trade. As you can see right here, this was the zone we were already paying attention for the possible sell trades. Now in the live session, right here when the price was already here, it formed a double top pattern. And right here, that was an entry. Now I've not taken this trade myself, but of course the students, the members, they are also trading these soft commodities. I am in one trade, which is wheat, which I'm going to show you next. But right here, this was a trade that happens double top, and that nicely pushed on, hitting 1.2 to 1 reward to risk ratio target, and then it quickly pushed back up. That is the benefit of coming out of these soft commodities. I don't like these soft commodities. I don't like to trade soya, but it is something the condition forms we took the trade. Let me show you the clip from the live session so that you can see how we entered the trade with exact rules and conditions. So all I want to see a condition. On 1 hour, we are getting a possible double top right here. So looking at that, and I don't know how it's going to perform on in soya. I'm not taking many trades on soya. So that's my stop loss, and then I'll be aiming 1 to 1 and 1.2 to 1 right here. So double top on daily, divergence on daily, and we can see a possible fall out of soya. Perfect. So what a good trade we had here on soya. Condition happens, and then we had a nice take profit hit that could have been to 1.4 to 1 easily as well, but we have set 1.2 to 1, and then it quickly pushed back up. And then we had wheat that already hit my take profit, but that was not a blind trade. That was a trade I've entered exactly here with a double bottom confirmation right at this candle on 4 hour. If you look here, we had a first bottom, we had a pullback, and we had a second bottom follows engulfing candle. That was my entry, and this is not a blind trade. It is something. The zone was already sent to the members. I've clearly mentioned that I'll be watching for a possible double bottom formation on 4 hour time frame. So that is clearly the intentions, that we are only looking to enter the trade from this zone once the price forms a double bottom pattern. And a nice double bottom happens, exactly hit 1.4 to 1 reward to risk ratio target. So that was one more trade that successfully pushed up, hitting the targets, and quickly pushed down. That is why very important to have your stop loss and take profit both. I don't take all the trades. If you're talking about soya, I've not taken that. This is the trade I've taken myself. But one more trade I want to show you. Not every trade can be a winner. For example, CAC 40. This was the trade that forms a double top, pushes down, pushes back down, forms a neckline, retest of the neckline. That would be a perfect entry, right, to go short. But that didn't play out. Trading is not a magic that every condition will work. This one didn't play out, and I don't trade CAC 40, but that is something my members are interested in. That is why I show you all the conditions. But if the stop loss is hit, you are out. There is no need to worry, because your account is protected with the stop loss, and that is what we need to do. Waiting is also your profits, because if you wait for the good setup, if let's say you don't enter any trades, means you are not losing anything. So you're protecting your account and wait for the good setups. But this was a good setup, less aggressive entry that didn't play out. That is totally fine. I have not taken it, but I just want to show you that this was the perfect setup right here for the double top and a retest for the neckline that didn't play out. That is why stop loss is very important. Now, like I said, my strategies goes with all the market. I want to show you one AMD stock trade, which is right here. Now, I've not taken this trade. Again, it was a request from the member to do an analysis of this market, and as you can see, we had a bull flag pattern that nicely played out with a breakout, and that nicely pushed up with a pin bar as well and pushed up exactly to my resistance and then start to push back down. So that would be a good profit if you would have entered here, exit here, and then it reverses from here. Looking at this hanging man, looking at this pin bar, we can see a possible fall and then continuation. So very important to know your exit points as well. So let me show you the clip where I mentioned this trade. Nice uptrend. Accumulation. Yes, we had a breakout already here. That signals the price will likely to push up and carry on and continue to push up from here. So for now, the price still has a room to push up at least to this level. Since there is a breakout here, and that shows the price is likely going to continue at least to the level above, which is right here. Awesome. So you see the power of conditions, and that was a good setup that plays out. And if you're taking these trades one by one slowly with conditions like breakouts, like confluences, then you can make money. In trading, you just don't go for the trades quickly. And a good example of that is right here, a trade setup I was looking at for UK 100 index. Now, I knew that is a bull flag pattern. Now, previously the bull flag pattern played out perfectly fine. But this time, I knew the price is already so high, trading so high. And at this point, I don't want to enter at the breakout. Even if I would have entered at the breakout, that could have given me some good scalp of take profit. That is good 37 points trade. That gives you good profits. But I don't want to enter here. Instead, I wanted to enter at the breakout, retest, engulf. That is something I've just shown you in the Forex trade, the way I've entered there. But that is my intentions. My intentions were not to enter right at the breakout. Now, when the breakout happens, lots of the traders, they are in a FOMO. Now, I want to enter here. What if I miss the trade? No. You see the confluences. You see the condition. Yes, this entry would be fine. Pullback entry bullish. That if you would have entered here, might have cut right here. But at the breakout, I was not comfortable because for me, the price is already high and we can expect a solid pullback. And that exactly happened. No condition means what? No entry. We had a pullback, no condition, no engulfer. I have left this trade. Let me show you the clip from the live session so that you can see whatever I'm saying, everything will make sense when you see these clips and how I personally do the analysis of the market and take my trades. So we are getting a channel, a bull flag pattern, a flag pole, and right here we have a bull flag pattern has been formed. So solid candle above will confirm their trend continuation. But if the price break above with a solid candle, I won't be entering aggressively, but I want to see a pullback and then rejection at the upper level. Perfect. So that pushed down, and that is how I avoided to take this trade. But let me show you one more trade that happens with conditions, and that was a perfect breakout. Now, looking at this nice trending market upside, the price was approaching the resistance, and we were already prepared with the symmetrical triangle pattern, the breakout above or below for the entries. Now, this was a solid trade and solid setup. Looking at a daily time frame, the price opens above 50 EMA, almost rejected from the 50 EMA, a bullish, solid engulfing candle. My pullback entry was formed here. That is a good setup for me to go aggressively in this breakout pattern. And right here, the breakout, and let me show you the clip from the last video so that you can see where I've mentioned this trade. And we are getting a pattern. I'm trading lots of patterns these days, lots of patterns, and that is valid pattern. Previously, we have taken this one, that 180, but it can still push up to these highs. We have got another pattern. So break above will confirm the upside move. And if we are broken above means we have a strong buying pressure and price will likely to push up from here and continue in an uptrend. Perfect. You see how nicely the trades are going, and that is one more winner and hitting 1-to-1 take profit. And if you trade indices, you know that is a big take profit of 533 pips of points that pushes up. I've kept my take profit till the zone because I don't want to go above the zone for the take profit, because I know that there might be a good liquidity in this area because previously the price fallen down from here, and as you can see, we are getting a reaction from this zone. And looking at on daily, I want to just keep my take profit till here because we had a good liquidity previously. So a good trade right here mentioned in the live session, and that is how I mention these entries to my students, to the members. Every Monday we do our trade setups and we look at the market throughout the week. We had to stop losses, but if you look at all the conferences, then the chances of making money increase dramatically. NZD CAD. Now, if you ask me what's the confluence here, for me, that the price is trading above 50 EMA. Second, we had this pullback entry bullish, a swing low candle that is valid on the other platform and valid in golfing entry. And then I was waiting for the breakout. Now, we already had a symmetrical triangle. We were prepared for the price that it can push higher. And then instead of entering the pullback entry, that could have been entered as well. But for me, there was a bit of range market, and that is why I was not really confident. I was looking for the solid close and breakout, and that happens with the solid candle, and that also hit my take profit of more than 1-to-1 reward twist, which I've kept my stop loss take profit till these highs and take profit just below these lows. Let me show you the clip from the live session so that I can see how we have mentioned about this entry. NZD CAD is right above 50 EMA, no patterns yet, but we do have a choppy triangle pattern, and that is what I'll be looking at. The breakout above will confirm the trend continuation, and breakout with a solid candle will confirm the downward move. Perfect. So you see how nicely the price pushed up, and these are the fake outs you need to be very careful of. Look at the higher time frame, look at the confluences where the price is heading to, look at the EMAs, look at the VIX rejection. For example, we had a fake out happened right here as well from this channel pattern right here. But if you look here on daily, that was nicely above 50 EMA, a nice bullish engulfer, and that is why it was not safe to go short here. Instead, if you would have gone long, that would be much safer. Right, I have not taken this trade, but just to show you how the fake out has happened. That is why these trend lines are aggressive entries. We can adjust these trend lines above or below. That is something you need to put some work in and do some more extra analysis. Like I said, I'll be mentioning that in my course soon with full rules. I forgot to mention about this trade. Previously, this trade I was already in, and before this trade, I've already shown you this pullback entry that was sent to the members as well. But previously, I was in this trade, and that is something I'm not just saying because of the sake of this video. I've already mentioned when the price broken out right, and I've already mentioned that I'm still in this trade in my last weekend's video as well. If you have seen the last weekend's video, this was mentioned. But in case you have not seen that, let me show you the clip from the live session when this trade was already running, and I've mentioned that I'm still in this trade. GBPAUD, I'm also in this trade. I'm aiming the targets right up there, which is 150 pips. I've entered at the breakout right here, and we are aiming the targets as well. So let's see how that goes. So bullish for this one as well. Perfect. So you see how nicely some badass pips I've captured here. Right here, that was 150 pips. Right here, that was 57 plus 136 plus. And if you add them, these are some badass trades. And as you can see, that hit the take profit after a couple of days, and that is how we need to do market analysis. I right at the breakout, and this trade took some couple of weeks to hit target, and trading is all about patience and discipline. That is why they say very few traders are profitable, because sometimes the traders get scared. That could have been a potential winning trade and they just come out quickly. A good example of that is right here. If you are scared, and you might be coming out right here because you have seen some good profits here, now the price is back in the loss, you would be coming out with a fear. That is something we need to eliminate. I've just shown you my live running trade here. I'm still in. We'll see how that goes. Now I want to add BTC, and I want to give you a very quick analysis as well. Now, this move was already predicted to the members in the live session that we're going to see a possible fall out of BTC. And this move was already mentioned in the live session. I don't know when, but that was mentioned on a daily time frame. Now, if you're my student, I teach you exact same as strategies. A pullback entry right here. If you're my student, that would be your entry, and that would have hit an easy take profit. See, all the strategies are working in all the markets, indices, stock market, crypto market. I've shown you all the markets. Now, this was clearly mentioned in the live session. Let me show you the clip so that we can connect the dots from there. This support in my last live session 2 weeks ago, if you look here on a daily time frame, bullish engulfer, a perfect pullback entry happened at the support above 50 EMA, and it nicely pushed up from the support level. Now, the price just make an equalize and rejecting from here. So we can see a nice bearish pin bar forming on a daily time frame. So we can see a short-term pullbacks back to this zone below, which is right here 109, that goes to 111995, this level. So I'm not buying till the price break above these highs. So this high must be broken for the further trend continuation. A pattern, evening star pattern, has been formed, so we can see a pullback to 50 EMA. Price might form a bullish engulfer, and then we can see a short-term pullback, a double top, and then a fall back down. Perfect. So a perfect move down out of this bearish engulfing pattern I teach my students. Now, this was not my entry, but this was just my analysis, and that nicely pushed down. And I'm still expecting a price to push down either further to 110.41, goes to 112,137, because that is the only buying area I'm looking at for the price, from where we can see some buying pressure and price will likely to push up. And that was a quick analysis on BTC. But this move was mentioned. Now, if you know these zones, if you know these moves, then that would have saved you to liquidate yourself with this big move. You would have just cut your profits if you're already in this trade. From here, you know where to exit right here. So expect some further pullbacks or push down to the green zone, since we also had this double top at this anchor level. Now, I also want to show you this CADJPY trade I've taken right here, a perfect example of a bear flag pattern. Let me show you the clip from the live session so that we can connect the dots from there. Yeah, you can look for the breakout above or below. For now, that is a bearish channel pattern. We are below 50 EMA. A solid close will confirm the downside move. Perfect. So how nicely the price pushed down from this bear flag pattern. We had a breakdown, we had a push up, we had this bearish candle right here hitting 50 EMA that nicely pushed down. By the way, if you're looking at this symmetrical triangle pattern, that has hit my stop loss. I've entered right at the break below 50 EMA, that pushed up, didn't play out. But I do have this trade, my stop loss was below here. I do have this trade, this trade, this trade, and stop loss here, take profit here. So that is what we call trading. Not every trade are the winner. Do have previous badass trades right here. So I don't want to go through all the trades. It's going to make this video much longer, but I will show you these conditions. Some work, some doesn't, but if your risk management is good, then no one can stop you to become profitable trader. Now, before I move ahead, I want to show you one more trade that was right here, and I was looking at this pattern to break. It just break today right here, but I want to see a pullback, and then I want to enter right at the upper trend line with the retest, and then I will be going long for this pair. A quick analysis, but don't take these trades. It's just used for a back testing. Just use on a demo account and learn from it, and then start implementing and build your own strategy. Finally, I want to add this trade as well, just to give you an example of aggressive and less aggressive entry. Now, you know that I don't enter aggressively. Now, this was a trade that was mentioned with the trade alert. That was a winning trade previously. NZD-JPY, I've also mentioned about this entry. Now, similar pattern, like I said, you need to learn from a trade alert. I've not mentioned the stops and target, but students know how the stops and target looks like. We had a price push up, pull back, engulfer, and now for me that's a winner because I've not entered right at the close. Now, if you would have entered right at the close, that would have hit your stop loss and then quickly pushed back up. For me, I mainly and mostly enter at a little pullback at the half of the candle. Now, this one, some trades I go quickly, some trade I wait for the pullback, and this is something I waited, and for me that was a winner. So that is a good thing to learn as well. If you are not an aggressive trader, instead of entering right at the close, make sure you enter at the pullback or 382 retracement. The way I've teach in the course, you can set Fibonacci tool and use 382 or 50% to take your entries, a limit order, and that is a good example of not entering aggressively. For me, that's a winner. This was a winner as well, that was shown in the previous weekend's video. Now, finally, GBPUSD, I want to show you. Now, this one, I was waiting for the price to form head and shoulder bearish pattern, which it didn't form. No conditions means no entry. Now, this evening star pattern was formed, but for me, that is not something I've tested a lot and heavily. That is why I've not taken this trade. But that could have been played out if there's an extra conference, like it is above 50 EMA on a daily or a weekly, and this pattern has been formed, some divergence. In that case, that would be a good setup. But hey, I've not entered. I was waiting instead for the head and shoulder bearish pattern, which didn't form, but instead the price break above, and now I'll be looking for the pullback back to the zone to go long again. So quick analysis on GBPUSD as well as a bonus. Now, there were multiple entries we had. Like I said, if you learn from the trade alerts, you know what to do, what to expect. We had a pullback, engulfer, that hit my take profit. Not sent as an alert, but that is my personal trade, and exact same entries I've been showing you and teaching you right here. If you look here, NZD CHF, same entry, swing low, bullish engulfing entry, that pushed up nicely. That would have been easily hit your take profit. I can tell that with the move right here. That was 19 pips and the ATR was 12. that would have hit your take profit easily. Then we have Euro GBP, a perfect entry, bearish engulfing entry, similar pattern, that would have hit your take profit easily. I want to show you these trades that is still one happening every single day and how much money you could have made. For the students, if you are my student, you know these entries with the exact rules. Now this, for the YouTube audience, this might look valid to you, but it is not. This is valid. This might look valid to you, it is not. That is why I have 6 rules for my entries. Once 6 rules are met, only then you take these trades. I can't explain these 6 rules in the videos. That is why I have full structural course where you learn all the rules for every single strategy. So this was valid entry, right? If you have taken that, then you have made money. This was mentioned in the live session as well. Then we had this entry right here that pushed down. Then we have a recent entry that just happened when the market just closed, which is USD CAD. Right here, we'll see how that goes. That just happened, just to give you a quick tip from this video as well. This is an entry as well. I teach to my students. Some entries are valid, some are not. And there are so many entries I can show you in the market, how my strategies are relevant and how perfectly it's been pushing up in the favor. Sometimes it has stop losses, but if you manage one good trade, then your profits will be much more better than your losses. Hope you got a value out of the first part of the video. Hope you have learned something out of that. If you're really enjoying my stuff, if you really like the way I trade, head to moneymarkers.uk, scroll down and look for this plan. If you really want to learn, if you really want to become a professional trader, if you're patient enough, not just finishing the course and start using live money and start trading. It needs hard work, back test, you need to go to the process. But if you learn the system, then trust me, you will know everything which I personally know from so many years now. And I've put all the knowledge in this one single course. And I'll be adding more things which I've been using from years and years so that you can have a better ROI and you can pick up some good strategy and build your own trading system. And a good thing is that you get these 2 plans free with that, and you don't need to pay monthly. It's just one-time payment. You get my AI bot just as an extra conference on the side. It picks up the trades for you as well. So consider spending this money rather than losing this money in one single trade. It will give you lots of knowledge, lots of education. I've done lots of courses as well, trust me guys, but I would say only 1 or 2% of the people, the courses I've done just to see what people are offering out there. I see my competitors, only 1 or 2% of them, they are telling you the exact amount of stop losses. Most of them, they will give you a generic stop loss above or below the wicks, which I do in my videos as well, because I can't explain every strategy in my public videos. But in my course, I have given you exact numbers of stops and target. If the ATR is this number, if the ATR is high, how much stop loss you need to use. If the ATR is low, how much stop loss you need to use. All the strategies, I will be giving you exact numbers of stops and take profits. But if you are already a profitable trader, you just need an extra conference from me, need my zones every week, which I show you every weekend's video, how nicely they react, then it is a plan for you. Only £25 a month, but in this plan you will not get a live session. But here you will get a live session, which I'll be increasing now from once a week to twice a week from next month, because I won't be in the UK and I'll be somewhere else, and I'll be spending a couple of months there, and I'll be mainly doing lots of trading. So this is something if you need an extra conference. So consider learning the system rather than blowing your money again and again and just searching strategies in YouTube. You can learn something, but it won't be a systematic way to learn. You need a systematic way to learn from the basics to the intermediate to the advanced and then to the expert level. If not, that's totally cool. Make sure you hit the like button for me so that you can get these content every week. So let's wrap the first part and let's start the analysis of net gas, gold, silver and crude oil. So before I head to technical part, like I promised, I've done the research. We all know that Putin and Trump just met. By the way, I know my voice sound much more clear because this time I've connected my mic, and this part I'm recording after I've recorded all the long video. But just to give you a quick overview, that according to Bloomberg UK, there is no such major deal that has been made with the Trump, but it was a constructive news. Now, something might come later on next month or a couple of weeks, but for now, as you can see, the Trump says the talk with Putin is productive, but no deal yet. Now, according to the current situation, fundamentally, the Trump says the talks were productive, but no deal yet. But the Putin talks were constructive and useful, meaning the market gets hope, but no immediate certainty. So there'll be short-term impact on natural gas, not something massive you'll see, because there are no such clear signals. Price may drop slightly because of some productive talks. Less risk of war mean bearish for gas. But since there is no actual deal made, the fall is limited. There is still a chance of the upside move, and we are getting a pattern which I'm going to get to in the technical part. But like I said, later in the days, if they have initiated a talks, or if, let's say, the Trump gave a statement or Putin gave a statement that they have come across to a deal or something like that with the Ukraine, then you'll see a big and larger drop. I'm expecting out of natural gas, at least 15 to 25% of drop. It is something I'm expecting from gas if something happens later on. But technically, for now, all looks fine. But these are the things you need to have in your mind as well. Now, we might see some choppy moves, some sideways moves out of the market for now, but we have some technical signals which we need to look at to take our entries. This type of situation, I mainly look at my technicals, and technically natural gas goes really well. So for now, I would say it will not crash. The gas will not crash at this point, and there's still a chance the price can open above in gap because the talks are stable. No deal mean there is still a fear, so there's still a chance of an expensive gas. So if the talk fails, the price will spike up, which we can see from the signs of the news, because no deal mean they can see a spike up. But in a couple of days, if anything happens, you will see a good fall. That is why make sure you look for technical signals as well. With that, we can look for the fundamentals, which I'll keep you guys informed. Now, there is lots of panic that if the price is going to reverse from here. Now, I'm still not bullish for nat gas. Yes, we had a bear flag pattern, which I mentioned, but the bear flag pattern will only play out if the price break down solid. I've already shown you that previous trade of CADJPY, similar pattern, bear flag pattern, breakout solid, and then it pushed down. Now, that never break below. Now, it can either push down and reverse, continue to push down, or either push up and reverse from here. That can still happen. Now, what to expect and how to look for the condition. Now, while I'm recording this video, I'm still keeping an eye on what Trump or Putin will say. And if I find something important, I will be adding in this video. If not, I will be just using the technical analysis, and nat gas runs perfectly fine technically, as I've been uploading video from last 4 years now, almost 5 years, every single day. Now, since the price just broke above, and as you can see, we are getting a nice rejection. Now, that signals that it might reverse from here, and it might form a reversal head and shoulder pattern from here. But that's still not guaranteed, because we still haven't got any confidence. For me to see a good confidence, an A plus setup, remember that was not an A plus setup. That was previously we had no oversold, no divergence, nothing. But we still enter the trade with taking the risk. Trading is all about risk. Now, here what I want to see for the good confidence. Now let's say the price start to push up. Now I want to see a break above 50 EMA with a solid 1 or 2 candle, break above this high as well, which is very important for your visuals. And same goes with Nemex and Capital.com and Ovanda. For your visuals, let's mark a termination zone right here and right here. And that is very important to see a break. Now I want to see a break above this termination zone, which is right here. Let's remove this flag pattern. And we have a little zone right here as well for your visuals. Now, I'm still bearish for nat gas, and I'll be only taking bearish trade if I see a solid push down, break below this low. I know that's a big move. We need to wait, and trading is all about patience. And then I want to see a pullback and continuation trades, and I'll be keep on taking shots till the next level, which is right here, which I've already mentioned in my last video. But that is a condition for sell, because we are in between the EMAs and we might be getting a push up. That is why if we get a push up, it is very important to see a break above 2.977, and close is very important. Once that happens, I won't be entering straight away, but it signals the price has a buying pressure. It will likely to push up, and I'll keep you guys informed if I see any news. Now, break above and then a pullback, and then engulfer. In that case, we'll have a head and shoulder with a slanted termination zone. That is even better. That is an advanced head and shoulder pattern. Students, don't get confused. Keep looking for the same pattern I teach you in the course. That is something I might be adding in the course later on. But in that case, the price will make a high, signals that now we have a strong buying pressure, and then I want to see a pullback and then confirmation like engulfing candle to go long. That doesn't mean I'll be holding on with the trade. I'll be waiting, and I'll be only taking 1 to 2 ATR for my targets. So for now, the first step to buy is a break above this termination zone, solid, then a pullback, and then we can see an engulfing candle to go long. So at this point, I can see some buying pressure, but that is not convincing for me to just buy anyway. I want to see a solid close, and that is what the trading is all about. Waiting and get a good badass setup. So wait for the breakout above and then pull back, and in that case we have a break of termination, a new high, a head and shoulder pattern will complete with a slanted trend line, means we have a strong buy pressure and we'll be only going long. Again, sell will only happen once the price will break below these lows, and then I'll be going short. Very important to see how the market opens in the weekend. If it opens above in gap, then we can simply see for the pullback, and then we're gonna go long. If the market opens down in gap, means we are still bearish, we are technically still bearish, and we can still see a continuation towards the downside. So we'll see how that goes, how the market opens. For now, we can just sit down and wait for the price to form some sort of pattern and give us a signal to go long or short. Now, I also want to add a little part here. I just don't come here to give you analysis. I want you guys to learn and become independent as well, so that you can learn and take your own trading decisions. So I want to teach you as well. Now, previously, if you remember the trade we were waiting for previously, if you remember last weekends, we were waiting for the price to form head and shoulder pattern. That time we already had a right shoulder and the left shoulder formed here as well, and we were looking for a buy signal within this termination zone. But what happens then? The market over the weekend opens down in gap. Now, in that scenario, the head and shoulder pattern was failed. So instead of looking head and shoulder pattern, we were looking for double bottom, which formed here, and we took a quick scalp and take our profits. So now similar entry and condition might be happening here, as we are still inside the zone as the price now hit the zone again. So we are getting another pattern, a similar pattern we were looking for, and similar condition over the weekend. If the price push back down, in that case the head and shoulder pattern will become invalid. If the pattern stays inside the termination zone and forms a bullish engulfer within this yellow box or a pin bar, then in that case I'm not expecting a solid breakout. I'm only expecting a bounce like this. That is enough to cut your profits and then come out and look for the further confirmation of reversals. That is something you need to know and understand, because taking your profits in time is very important rather than just losing everything which you could have made. Exact example like this, if we have not taken the profits here, we would have lost everything. So that is something you need to keep an eye on as well. Don't rush and don't enter in any trade because there is no signals as of yet. And on capital.com we have a solid close above 50 EMA. Again, that doesn't mean I'll be buying. I'll be simply looking for my termination zone that was already hit. Now there is a very likely chance the price come back down and retest the termination zones, which is right here, and then it forms a condition right here to go push high. So we'll see, and I'll keep you guys informed in my next video or my members only video as well. But that is a kind of head and shoulder pattern has been forming, but again, it is not an A+ setup yet. I want to see a solid confirmation, and if the confirmation happen here, that will not push up strongly. If let's say the price pulls down, it will complete a head and shoulder pattern, and we can see a possible push up from A till here just for a quick trade. And once we are broken out above 3.043, only then we will have a confirmation the price is going to completely reverse from here. So keep an eye on a possible head and shoulder bullish pattern. If that forms, it must come down here and then form an engulfing candle or a solid pin bar, which I'll keep you guys informed if that condition happens. So I'll sit back and wait for the possible entry condition. An aggressive entry again wouldn't have been played out here. It did push down to level 1, almost there, but then it pushes back up. And like I said, I don't like to enter aggressively as well. So right here, again, on this platform, the zone is quite higher, which is right here. For the price to form a completion of head and shoulder pattern, it must break above, then a pullback. Now on this platform on EMX, if the price break above with a solid 2 or 3 green candle, I'll be okay to go for the small trades like a pullback and engulfer to go long till here. That will be a valid pullback entry on EMX to go long till here. But for that, I'll must need a break above 50 EMA with a solid few candles, pullback engulfer to go long till here. Once we are broken above 3.143, only then that will be a confirmation of complete reversal. So keep an eye on these conditions very closely. Not buying and not selling till we see a condition. Buy will only happen with a pullback entry bullish. Sell will only happen once we are broken below these lows. And I'll keep you guys informed in my daily updates. And same goes with MCX. That's a pattern you guys need to look at for your entry conditions. For now, you can still see a push up and the rejection from 50 EMA, pullback, and then continuation. I'll keep you guys informed with the detailed videos as well. Next up, we have gold. Gold has just broken down from this symmetrical triangle pattern. Now, like I mentioned in my last video, silver has just formed a bearish engulfer. Sorry, silver and gold ratio has formed a bearish engulfer. Means we can see a possible push down. Now, if you look at this move, a bearish move in silver, that is a bullish move. Now, that is something I told you in my last video. Now, if the price, let's say, start to push down from A, it will start to push up in silver. Silver react nicely. So, looking at the ratio at this point and looking at the bigger picture, silver is trading in between this channel. So that is something you need to see a break above or below. Breakout below will confirm the downside move and up will confirm the upside move. But looking at the ratio, we can see a possible push up at least to the upper trend line of this channel. And once we are completely broken out above, only then I'll start to look for my buy entries with pullbacks. If you have broken down, then we are looking at the downside. But for now, there is no condition. That is what we need to see, a break above or below. I've shown you multiple breakout trades and how nicely they played out. That's totally up to you. If you are not an aggressive trader, wait for the breakdown, retest, and then look for confirmation like engulfing candle. Breakout above, retest, bullish engulfer to go long. So that is something you need to look at. For now, we are trading in between this channel. And right here for the gold, we are now broken below. So for the gold, we are below 50 EMA. Now for me to sell, I want to see some more momentum, then a pullback, and then an engulfer to go short. That is all I'm looking at. I'm not buying gold, but remember, there is no conditions yet, and I won't be entering any aggressive trades for gold. Looking at silver right here, unless silver is broken below solidly, only then I will be looking at the gold to fall as well. So that is why very important to wait for the less aggressive entry, which is a pullback and bearish engulfing candle. If that happens, only then I'll be going short, only looking for bearish pullback trades with engulfing candle. And if the price dramatically broke above 50 EMA, we have a change of trend, and in that case I'll be looking for the pullback entry bullish. So very simple, above 50 EMA, solid candle, pullback entry bullish. Below 50 EMA, which we already are, I want to see some more momentum, break below this low, and then a pullback and bearish engulfer to go short. So only waiting for the possible valid setup. Now I've shown you multiple setups. I highly recommend you to go back and see my first part of the video, how nicely these setups forms, and only then I've taken my trades. Now if you look at on daily, we are above 50 EMA. That is why I'm very reluctant to go short at this point. We are above 50 EMA, rejecting. Once on a daily, we are close below 50 EMA. Only then we will be going short completely. That is why break below 50 EMA on daily, then a pullback, and then going short with the engulfer will be much more safer. Finally, we have crude oil is nicely pushing down as expected, and we are just looking at the level below. That is all I'm looking at. 54.88 goes up to 57.31. That is the only place I want to buy. Now, the Putin and Trump is going to see each other again. If anything happens, market can open dramatically up or below. That is why there is a weekend. Over the weekend, the fundamentals can happen. Big news can happen that can cause a big gaps up and gaps down. That is why very important. If the price stays below, then I'll be looking at this level. If the price opens above in gap above 50 EMA, then the trend will change and we are only looking to buy with pullbacks. For now, technically we are bearish and we are only looking for bearish pullback trades, but for that I must see a break below this low and close, then a pullback, retest, bearish engulfer to go short. A very simple pullback setups we are looking at in this nice bearish trending markets. And the level here on NEMEX is right here, which is 55.10, goes up to 57.90, from where we'll be looking to buy. Again, I'll keep you guys informed. So that's it for today's video. Hope you got a value, and if yes, if you're learning out of analysis from the weekend's video, make sure to hit a like button for me. It really helps me in a YouTube algorithm. Hope you do it green, and I'll see you guys in the next video. Till then, take care.